back to the Proof of Words podcast. I am, as always, your humble host, Patrick. And with me today is my co host, Matt. And Matt, we have a very special group of guests with us today. I don't know if you've been following too much of what we do at Samra Asset Group and through our subsidiary, Samra Alpha. But one of the things that I'm most proud of that we do, and this quite frankly came from a very drunken conversation I had with the head of Bitcoin Magazine, Mike Germano.
Most good things come from that.
They really do. And I don't understand why people shun alcohol, but my best ideas always come when I'm completely plastered. But him and I got together, and I wanted to find a way where we as Samra Asset Group could invest in and find new emerging managers. And I wanted to use his platform because being the CEO of Bitcoin Magazine, running Bitcoin Miami, Bitcoin Amsterdam, what will be this year Bitcoin Nashville, I felt there was a way that we could acquire managers through that. So we sat down together one Thursday morning, I think it was, got completely plastered on mimosas, and decided that we were going to run a Shark Tank-esque competition to find asset managers in crypto, emerging managers that are absolutely brilliant, want to find a way to attract new capital to their platform. And I am unbelievably pleased today that we have Maximillian Pace and Jack Elliott from Animus, who were the very first winners of the first ever Bitcoin Alpha competition. Thank you guys so much for joining us today. I'm just going to turn it over to you guys. I mean, everyone can see how elated and ecstatic I am right now, but maybe if you would be so kind as to do just a quick introduction to yourself and what it is that you guys have been doing at Animus.
Yeah, thanks for having us, Pat. Jack and I are excited to be here. Obviously, a long time in the making. I'm Maximillian Pace. I'm our CEO at Animus Technologies. Animus is an AI platform for building data-driven strategies, particular to cryptocurrency.
Yeah, and nice to meet you guys as well. I'm also excited we finally got to sit down and do this. My name is Jack Elliott. I'm the head of technology over here at Animus Technology, and I do all the programming and building for all the stuff that Max talks about.
Wonderful. Well, there's always got to be the brains behind the showman, correct?
Oh, of course. Yeah, it's a dynamic duo situation.
So you're applying AI technology to create these types of strategies. I don't know which one of you both is more qualified to talk about that, but I'm just going to turn it over. What does it mean to have an AI-based strategy in crypto, in Bitcoin?
I think that's a really good question. And I think obviously, especially in today's day and age, like that term gets thrown around a lot. And so I'd say that what we're looking at right now is definitely something closer to machine learning. It's reinforcement learning. It's kind of good old fashioned machine learning, as you will, and a good old fashioned AI. But essentially what that means for us is we've built out an entire end-to-end platform from ingestion of data all the way up into feature selection, data transformation, data cleaning, and all the way into modeling, whether it's simple things all the way up to these neural network models. But we essentially have this full end-to-end pipeline for making data-driven decisions in crypto. So for us, what AI-driven, machine learning-driven decisions means is that we're essentially driving all decisions, all trades that are being made in the platform from this data and from this pipeline that we've built, right? So for us, that looks like collecting data on a bunch of different sources, basically anything and everything that we think is interesting, we throw into this general blender of data that we have here, right? And that looks like all the traditional fund stuff, all the market indicators, the volume indicators, things like that, as well as some interesting stuff. We look at all sorts of different activity on chain, who's moving money, where is it going to exchanges, from exchanges, is it old wallets, new wallets that are moving that money around. And we also track a lot of different things as far as social sentiment is concerned. So the conversation surrounding all these assets, right? How people are talking about crypto in general, how people are talking about Bitcoin, how people are talking about Ethereum, right? Things like that.
Well, so how are you following that? Because I remember my first foray into crypto back in 2015, 2016 or so. There was a platform called Santiment. It was actually based in Germany, where I was living at the time. And they actually kind of had a similar theory that they were tracking all the social conversation in and around crypto. I mean, is that a tool that you guys are using? Have you developed something of your own? Because at the end of the day, let's be honest, the social sentiment around crypto seemingly is more valued from a trader's perspective, especially with the shit meme coins, than any fundamental value, right?
Yeah, definitely. So to answer the questions kind of in order there, as far as the actual sentiment analysis, the NLP that's going on, we actually work with a partner we worked with for a number of years that helps us out with that. But essentially, what they're looking at is the textual news. Primarily, I think it was from Twitter. I do believe that they actually include some news sources and articles from other spaces, but a lot of it is focused on Twitter or X. Sorry, now. That is, it's a little bit faster and more reactive in terms of the actual speed with which you can get data. But it's super interesting. And I think there's a lot of really interesting theory that goes into that particular component of it as well. Because to your point, yeah, sentiment has mattered a large amount in crypto. And I do think that landscape is changing a little bit as the market matures. But to your point, especially in the smaller cap market, sentiment is a huge, huge deal, right? Maybe even more important than, to your point, some of what we would call fundamentals for crypto, right? But that whole side of the equation is an art in and of itself, because we like to think about it that there's not just text in a vacuum, right? There's not just what is being said, but who is saying it is also really important, and where they're saying it and how they're saying it, right? And so there's this entire art of kind of figuring out who are these reputable people in the space. It's not just follower count. It's like, who are the people that are following these people, things like that, right? Trying to kind of build up. We were actually having a conversation about this yesterday. It's kind of like PageRank, what Google did, right? We were essentially trying to figure out like where are the good websites, who's got the good backlinks, kind of stuff like that, right? And essentially we're trying to put together not just
So this has basically become SEO, shitcoin search optimization, right?
essentially, yeah. Yeah, I mean, and I think that that's kind of where the art and the science is, because I think to your point, I think a lot of people have thought about the fact that conversation is a main driver of what's going on in these markets a lot of the time, right? But there's definitely a level of nuance that's required. You can't just spin up a Twitter bot, grab the 50 most recent posts about Bitcoin or Ethereum or whatever, and then expect it to work, right? So that component's been a pretty interesting journey for us. And yeah, to your point, it has been really, really interesting just to see how this behaves and how these markets react to social sentiment as opposed to something that may be more traditional, like an equity or a stock.
Yeah, Pat, and one thought to add here as well is that sentiment is definitely one of the core drivers of the differentiators between Animus and the rest of the herd. Like when I'm out at the conferences trying to understand what a lot of these other managers are using, a lot of them have actually struggled with understanding how to use sentiment and quite frankly, as an effective way as Jack has. A lot of them, and I think a lot of that, Jack, you can probably speak to this, but there's a lot of noise inherently in sentiment data as a whole, right? So being able to actually understand it and use it is an entire endeavor in and of itself that makes it extremely difficult for a lot of managers to use. So I think just from my perspective, when I go out and try to understand kind of like where our advantages are, I think this is definitely the thing that sticks out the most to me.
So it's very interesting to hear people say that, because, I mean, we're taught when you come from TradFi, which I do. I mean, I always say I'm a recovering CPA, therefore a high functioning alcoholic, right? Which is why I work in crypto. Now, why do you think sentiment matters so much in crypto? And I don't know if that's something that necessarily holds true to a certain extent, because theoretically you invest based on, I mean, I come from the Ben Graham school of value investing, right? That's how I was raised. That's how I was taught. That's how I view everything, which is maybe why I'm a bit more of a Bitcoiner than anything else. But then you see some of the values that are derived out of NFTs, shitcoins, platforms, etc. Right? Like it's absolutely astonishing. I'm here for it. I don't know if I buy it, but I'm here for it. And you're starting to see that leak over into traditional capital markets. I mean, God, as of this recording right now, June 6th, just look what's happened with GameStop over the last week or two. It's been astounding. And that's a company that has been flailing for God knows how long. I mean, might there be a way, I suppose, that we should be applying sentiment analysis towards traditional investments? Because it seems like the crypto mindset is leaking over into our TradFi ecosystems.
Yeah, I mean, I'll give my thoughts here real quick, Max, and then you can jump in. I see you wanna get something in there, but for me, I think that it comes down to the split psychologically between retail and institutional investors, right? I think that sentiment matters a lot more for that retail crowd, right? And so traditionally with crypto, I think that there's been a lot more, and this is definitely diminishing nowadays, but it was a lot more of a retail driven game, right? Especially originally back in the day, it was a lot of believers and a lot of people that were basically trying to follow this value. And it was driven by that speculation of future value, right? And I think that speculation is kind of what is unhinging these wilder swings that you're seeing in crypto. I think that's also probably the case for things like GameStop as well, the speculation, right? And I think that, again, that's much more important to a retail crowd. And I do think that that's why sentiment matters so much in crypto historically. I think it's why it still matters now. And I think that's actually why you're seeing with the rise of this more kind of like Robinhood level retail investor crowd, right? I think you're seeing some of that start to creep over into traditional investments as well, right?
Did you see today that Robinhood bought Bitstamp?
Yeah, I did not see that yet.
Absolutely wild.
Great news. Yeah, I would say from my perspective on the speculation, it's funny, me and a close friend, we like to call it attention economics is the world that we're headed to. And it's really just about communities that can capture engagement in any sort of shape or form, right? And the way that crypto and Bitcoin has such an altruistic following, like people are highly engaged. So I do think like there is a large degree of sentiment that does move the price, right? And when you relate it to like something more like a traditional asset, right, there's a lot less in terms of like fundamental value drivers, like we're talking about, right? Like cash flow statistics, head counts, right? There's a lot less.
I'll disagree with you for pretty much everything other than Bitcoin in that regard.
Yeah, and that's also why we find it, I think, so powerful at what we do, right? Is like there is inherently less variables from like I would say a traditional equity, but the world, in my opinion, like we're definitely moving towards a world where views and awareness and engagement are pretty much paramount in anything. Like if you look at the way that like Telegram, for example, like their Ton coin, right? Pantera's thesis about that was that let's invest not because they had a great token in the beginning, but because they had 200 million active users that they could capture by releasing a token, right? So first, I think we're moving towards a model of active social engagement. Then we release a product. Then the business model comes second, which is super fascinating. So I agree with you that I think traditional equities are also kind of moving in that way.
So here's my fun thought. I think some of the best builders in crypto learned how communities and how user engagement is significantly more valuable than revenue from Silicon Valley. Because, I mean, just look at what the social media platforms, what the large tech companies were doing in the 90s and in the 2000s. And okay, then we had a tech bubble, but then people actually figured out how to use the internet. I mean, that's the Zuckerbergs, the Jeff Bezos. I mean, I don't need to rattle off the companies that ended up capturing that environment, but you ended up having groups that delivered new business models with this new tool, the internet, that people finally figured out how to use. And then fast forward a couple of years, and you have all these wild and crazy and stupid startups building these new tech companies, new social media platforms, etc. And I always liken this to that HBO show, Silicon Valley, where there was one scene where the guy just like tells his startups that he's invested in, no, don't earn revenue. Why would you ever want to make revenue? You want to have users. If you earn revenue, your board and your shareholders are just going to ask, why do you need more revenue? Or like, why are you not making more revenue? And I kind of liken that to crypto where it is right now, because those fundamentals are completely thrown out the window. It's all about social engagement. It's about social equity to a certain extent. And that seems to be in crypto, as also proven in Silicon Valley, more valuable than actually earning money, actually having cash flow. And all you have to do, even from a Fortune 500 perspective, is look at what Elon Musk has been able to do with Tesla. And now, granted, Tesla over time has been able to become, honest to God, I don't even know if it's profitable. I don't think it's profitable. But that was basically a meme stock before we even had the term meme stock, just because of what it was trying to do. So how much of that element is built into your guys' model? Is it a significant portion? Is it a minor portion? I mean, I'm very interested to know.
So as far as our models are concerned, there historically actually has been even a larger sentiment component than there is now. I think that as we've matured, we've continued to kind of increase the things that we're looking at. So we're looking at a much more holistic kind of set of information.
Mm-hmm.
That being said, it has been and has continued to be a pretty significant part of the way that we look at the market, right? Because I think in a number of different ways, everything else that happens is kind of contextualized in the context of that current sentiment and that current environment, right? Now, for us, we are primarily working with Bitcoin and Ethereum, so we're not as sensitive to some of these smaller communities, right? The kind of the tokens that you're mentioning, right, that are really working on engaging in growing their user base, right?
Yeah, but I assume
Um,
that's just because these are relatively illiquid and don't fit the strategies that you guys have built. It doesn't fit the algos, right?
Yeah, again, we basically are working in a world where data is everything, right? And so the better quality data that you have access to, the better models you can build, right? And historically speaking, that has been Bitcoin and Ethereum, right? For just what Max has said, right? There's a number of really, really smart people who are really engaged in these ecosystems who provide these products, right? And there's just the infrastructure there. That's not to say that there are probably opportunities to kind of go down the depth chart in terms of coins and start to find winners and start to do a little bit more of this more nuanced social media analysis. That's just not necessarily what we do here, at least for our clients, right?
So very interesting. So you guys you guys won the Bitcoin Alpha competition. We, as Samara Asset Group, have seeded your first fund just in the last month, actually, with $1 million. Tell me, what was it like going through that competition? Because I mean, I don't know if Adil, who's the CIO of Samara Alpha, ever told you this. We ended up having over 200 applicants to that first round of competition. We announced it in Bitcoin Miami. We did the actual kind of Shark Tank-esque competition in Amsterdam. But you guys, so I was actually astounded because at first I expected maybe one or two managers out of this would be investable. Adil told me that there were over 20 groups that he was willing to do thorough diligence on out of the 200 applicants. So we go through the process and then we identify three. You were one of the three and end up winning the competition at Bitcoin Amsterdam. What was that experience like for you guys?
Yeah, I'm happy to start. I think it started out quite funny to us, to be honest with you, because Jack and I were part of a USC accelerator program where we actually had a group of interns, and one of them comes to us in the summer and is like, "Hey, like, you guys are perfect for this competition. Like, I don't know if you're aware of this, and I have some USC intern. Shout out Joshua Campbell. My God, he comes to me and he's like, "Hey, like, there's a competition for exactly what you've been trying to do for like 5+ years." And we're like, "This is great, right?" So I'm like, I tell our other co-founder, I'm like, "Hey, Garrett, can you please like just fill out the form? Like, who knows, right? We'll put in the submission." And obviously, it got more real and real over time with the rounds of interviews. But looking back on it, I find that moment quite funny because when Jack and I had started 5 years ago, both of us agreed that the business model was relatively unknown. I think at first it was like, okay, maybe this turns into a fund, right? But we were more focused on like, hey, we know that this problem that we're solving is going to have an immense amount of value, and there will be product market fit as we grow and evolve. But we
Mm-hmm.
didn't come out to the bat with what I would say like a perfect business model. We're just like, hey, we both really just want to solve this because it's very interesting. So to me, it's funny how years later, like the inroad of acceleration on the business side was actually this competition, right? That we could have never seen when we started this thing. So to me, it was quite funny to look back on it and be like, wow, that we would have never guessed that, right? As the kind of the acceleration point for our company, and it definitely has been. So that and the fact of like just getting out to Amsterdam, all being there as a team, being able to accept that award, like that was a really special moment. And I think one, Pat, like you guys are doing a great job. I think there's a huge dislocation between emerging managers and gaining credibility and putting them on a platform to truly succeed in a world like asset management, which is just historically extremely guarded, has tons of friction, right? It's a very
Yeah.
difficult space to get into, like, and you're well aware of that, which is why you're running the competition. But for us, it's like we had been building a war chest of really good data to be able to support ourselves, right? But without that next step, without that kind of like honestly shining light of credibility, it's quite hard to do that as an emerging manager. And so to us, I think like,
and believe me, I know better than most. I mean, so before I was CEO of Samra Asset Group, I had my own company, Deutsche Digital Assets, that was managing some of, actually at the time, the company was called Cryptology Asset Group. We rebranded it to Samara Asset Group. And I was trying to build an emerging manager over here in Europe. I wasn't doing anything hedge fund related, anything data related, because frankly, I'm not smart enough to do that. Honestly, like you guys are infinitely smarter than I am. I'm a CPA by trade. I used to audit Vanguard. I used to audit DFA. I used to audit BlackRock when I was at PwC. I'm an index fund guy. Beta products make sense to me. And that's the extent of my imagination to a certain extent. So when I came over here to Europe, I founded Deutsche Digital Assets. I had the great opportunity of building some of the world's first ETP products, the European version of an ETF before ETFs existed in Europe, or not in Europe, but in America, Canada, etc. And I couldn't tell you how difficult it was to attract AUM, assets under management, being that early stage manager. And I never imagined that would be the case because I figured, okay, if you build it, they will come. Build a good product. And we put all of our effort into building a good product, probably the same as you guys put your effort into building an amazing strategy, building that data set and articulating that data set. And unfortunately, the AUM didn't come. And I never understood why. And then I learned how this industry works. It's all about trust. Which, okay, fine. Every industry probably should, to a certain extent, work around trust. But when you start talking with these old hats from institutions, banking, old asset managers, ETFs, it is a damn near impossible sell if you're young and emerging. On the flip side, looking at the crypto markets, you have some of the smartest managers on earth that are managing SMAs. And that's basically how everybody in crypto is doing it, right? I mean, all the Twitter traders, et cetera, they're managing SMAs because they can't raise funds. I saw a huge problem. I figured, okay, being an emerging manager previously myself, I want to find a way to fix that. And that's where this came from. At the end of the day, I want to enable managers to take their genius strategies, which is something that you guys have created, and not have to worry about the regulatory, the compliance, the administration, fund accounting, the audits, all that bullshit. That's stuff you don't want to deal with if you're an emerging manager. But hey, you have to do it if you're going to run a fund. And that's where we at Samara Alpha came up with this idea. Why don't we just give really talented managers a fund? We'll seed it, put money in, and then hopefully we'll help them raise money and we all make out in the end. We all end up raising money together in the end. It just seems like a perfect symbiotic relationship. And that was the whole inspiration for doing it. And I'm unbelievably enthusiastic that you guys ended up winning this competition, because being here and working with, frankly, what are entrepreneurs like yourself is why I love being in this is why I love being in this industry.
Yeah, no, it's a great point. I think one thing that definitely resonates with what you're saying, and it even ties back into something we talked about earlier, is like building that community. Like for us, the AUM, the asset raise, was not easy off the start. Like this is a product, again, we're starting to see the benefits and the momentum of working on this for almost 7 years now. And a lot of that period was us trying to articulate and teach people just about what we had built. Right. And to a degree, that was even a struggle in the beginning, right? It was just to get
people
in the room to understand what we were doing. But I think tying to your point, we were able to kind of organically build a community over time of people who were more and more engaged and had been turning their head into crypto naturally through all the market cycles and the volatility. But I still think that there needs to be some sort of like cataclysmic moment or some social moment, right, that brings that to light, to ignite that community, right? And I think that's definitely what I had felt was not only, I'd been speaking to hundreds, if not thousands of people about this quite literally every day for 5 years plus, right? But as soon as you were able to shine a light on it in some sort of like global fashion, like really bring it out to light in a way that you can glean on the reputation of Samara in a way that can uphold us in the public light, I think that's what really, put blood in the water for most people. It's like, okay, what I had thought, because to us, a lot of times when we're pitching this, like, it sounds like a pretty crazy idea to most people. We're like, you guys say you can
Well,
predict the future,
like
right?
half of the conversation we've had thus far is you're trading based on sentiment of degenerates on 4chan with meme coins. That's a hard sell to institutions and family offices to raise money, right? But it's a good sell.
Yeah. No, I mean, I was just thinking, like, especially early stage. I think it's a little bit better now. It's a much more mature market in terms, but like, you think about it, we're coming at people with all of the buzzwords all at once. We're like, we got crypto, we got AI, we got machine learning, yeah. And so for a while, it's just like each one of those things was a successive hurdle we kind of had to get people over. And, we found ourselves not just having to sell people on like ourselves, right, the concept, but also cryptocurrency, also machine learning techniques, right. And I think that the world has started to warm up a little bit more to both of those particular topics. But yeah, especially initially, it was definitely a struggle. And so to Max's point, I think having the social validation that it kind of ignited all that prep work that we had been doing was a huge deal, right? And that's definitely gotten the momentum. I think that that's something that's is under thought about in asset management in particular is momentum, right? And I think that that's something that, like, once you kind of get it going, it's one of those things where money begets more money, right? And so I think that was a big deal for us, especially with the way that the competition went down.
And that's exactly what we're here for. So, I mean, Max, you are going to be joining me, and I don't know if you are as well, but we're going to be heading to Bitcoin Nashville, yeah?
Mm-hmm.
And I've heard you're a golfer.
I am, yes.
So you're going to come to the Samra Bitcoin Golf Championship, I presume,
I hear
yeah?
there's a golf tournament, and I had to sniff my way in, yes.
Well, you're going to be joining my flight. I'm going to be really happy to finally get the opportunity to meet you in person. But yeah, we're going to be hosting that Bitcoin Golf Championship in Nashville, which, good God, I am not looking forward to it, to be completely honest, because Nashville, that time of year, late July, it's hot, it's humid, it's going to suck. I'm going to start drinking at 7 a.m, and that's the only thing that's going to get me through that day.
Yeah, no, I'm excited. I'm looking forward to it. I don't think I would have imagined that the crypto community is doing athletic events just yet. So I'm excited to see how that shakes out and who the participants are for sure.
Oh, come
But
on. The crypto community is quite based.
I'll have to.
They're largely into
I was
athletic
just,
events.
let's just say I'll be back at the range the week before.
Only the week before. You're not already training.
No, I played a lot of golf my whole life. I also played a lot of tennis. Recently, I'm like deep into my tennis again. So I've been playing pretty much every day. But we'll definitely shift gears in time for Nashville, no doubt. I hear there's a potential Bitcoin on the line as well. So that's
There's an entire Bitcoin on the line, and yeah, if anybody hits a hole in one, I forget exactly which hole it is. I think it's hole 6. And like they even showed me the contours of the green and showed me where I can pick where the hole will actually be. I picked the spot that I think is the most likely to get a hole in one. It's in the front right of the green because it's a little bit of a back slope, less distance as well. I want somebody to hit a goddamn hole in one. I would love nothing more than to give away an entire Bitcoin for somebody hitting a hole in one, because just imagine the brand recognition that comes with that. That's something that goes viral, and we're going to be videotaping, live streaming the whole thing. It just is so exciting for me.
Yeah, that's exciting. I mean, that would be awesome. I didn't know it was live stream, so now I'll definitely be getting to the range this afternoon.
So I actually played a round of golf this morning, which is why my face is so red. And only when I got on this podcast with you and I can actually see myself in this video stream, am I realizing how red I am? But like, hey, it's my Irish tan, I guess, right? So tell me, guys, you've developed these AI tools largely for crypto trading as of yet. Where else can Animus apply the technology that you guys have been developing across different verticals? I have to assume that you guys aren't keeping this just purely to running crypto strategies. There has to be many, many different ways that this technology can be used.
Yeah, I think that that's something that maybe even to a fault at the early stages is something that's been kind of a core tenet of the way that I and we've built out everything that we have here at Animus is that it's data agnostic, it's market agnostic inherently, right? And the idea is, the same tools that can be used to process data for crypto, why not use it for stocks? Why not use it for any sort of other different asset class, right? Now, historically speaking, I think that the number of different things we've talked about here provide specific advantages for us as far as the cryptocurrency market is concerned. That's kind of our first best effort. But that being said, there's definitely plans and ideas that bounce around our heads of exactly how and when we can expand this technology into some of these other asset classes, right? Because I think it's a natural extension to most people who talk to us and think about it, right? It's like, okay, but what about insert my favorite asset class here, right? And I do think that that's something that's very exciting to us. And I think that as long as we can continue to build out the technology in a way that supports it, I think the sky's the limit in terms of the things that we'll be able to trade, right? If we can get our hands on the data that we need, um, I think that's really the name of the game, right? And the rest of it's just same deal. It's just putting together the actual final models. But it's something that definitely excites us. Obviously, we're sticking right now to what we're good at. But that being said, as that starts to get going, continues to get going, I think there's ample opportunity to kind of start to spread the love out to different places.
What would be the main restriction outside of, I don't know, I guess data feeds, right? I mean, so I would imagine it's probably easier to aggregate on-chain data, on-chain sentiment, than it is to do something in traditional equities or commodity or debt markets, right? Is that the main hindrance, or? And I don't know. I'm not smart enough to understand what the issue might be.
No, I think that that's you hit the nail on the head as far as that's concerned. I think that there's a number of challenges. Obviously, I think that one of the advantages we have in crypto is that we spent so much time in this particular space and we kind of understand the ins and outs there. But no, I think that the challenges with traditional markets are definitely going to be the visibility and the immediacy of the data, right? Like if you think about it, to your point, these on-chain metrics we're looking at, every transaction is visible to everybody else who's running a node. You can start to aggregate that data and start to provide those statistics like in near real time, right? That's not necessarily the case for a traditional equity shop. You might be waiting at the same time as everybody else to get particular statements or releases or earnings calls, things like that, right? And so there's definitely more nuance in terms of particular event.
Well, unless you're a U.S. senator.
Yeah, we're not quite on that mailing list yet, but there are a number of different challenges that kind of have made there, and there's also just the entrenchment of that particular group of folks, right, that have been trading those assets for so long. There's definitely, I think there's some sort of semblance of like the in group and the out group there as far as like that particular world, right? And so breaking into that's definitely going to have challenges, but it's not something we're shying away from. But again, it's just about getting good quality data in a timely fashion, right, for us.
So, I mean, do you see a world in the near future where you guys are going to be able to offer this towards other asset classes, or do you expect that the future of Animus is largely going to be focused and centered around crypto? Because, like, for instance, like my entire hypothesis around where crypto is going is, I mean, the reason I ended up getting into crypto is because I mean, I used to work at the Deutsche Börse, the venture, actually on the venture capital team at the German stock market, right? And even as far back as 2015, 2016, when I was there, we had a conviction that blockchain and DLT technology would inevitably transform capital markets. To me, it was so stupidly self-evident that every asset inevitably would be tokenized. Every asset inevitably would be blockchain based. And everything that's transpired over hold on, I go look at the corner of my laptop. Oh God, it's 2024. So that's 7-8 years now. God, I'm old. But everything that has transpired over the last 7 to 8 years has only proven my initial hypothesis correct. Every asset, every equity, every debt, every parcel of land, bar of gold, it's inevitably going to be tokenized. When that happens, it almost seems as though you guys are going to be in the pole position to aggregate such on-chain data for what will be the tokenized equities, tokenized debts of the future. How do you element sentiment into that? Because I feel like it might be a little bit more difficult, if you know what I mean.
Yeah, definitely. I mean, the thing about it is I don't think that we are, enshrining any particular part of what makes our algorithms work right now, right? I think that's actually kind of a core component of the way we think about these things is that it is inherently an iterative
Mhm.
process, right? Even right now, as crypto has matured, the things that drive that market have changed, right? And it's going to continue to change, right? And the things that drive these markets as they get tokenized are going to change, right? And so for us, it's not so much about like I need to make sentiment work, right? It's about what does work, right? And maybe that is sentiment. Maybe the data availability becomes better there. Maybe it's not. Maybe there are other things to your point that we can now observe thanks to this more digitized market that can help drive us in those
Mhm.
models, right? And so I think the short answer is that it just comes down to what works, right? I think that we're a pretty pragmatic shop in that regard, right? And so if we can make sentiment work, right, that's awesome. And I think that there's clear examples. You brought up GameStop, right? Like there's clear examples where sentiment is driving retail prices like that, right? But I guess it really just depends. I would imagine that the conversations are going to continue to be more and more online. I think there's going to continue to be more and more visibility about what people are saying about things, right? So that is definitely going to be there. Now, whether or not you can kind of surface it and sift through all of it and get good signals out of it, that remains to be seen, right? That's going to be, market dependent, right? But that being said, it's something that we'll definitely be considering, as we continue to kind of look at these different asset classes. And we really just want to understand what makes them tick, right? And for us, the reason we came to sentiment is because that's what we observed makes crypto tick to a degree, right? Especially historically, right? So
It certainly seems that way.
yeah, it remains to be seen. Like I said, if we can find a way to make it work, wonderful. If we need it, great. If we don't, also great, right? We definitely take it at a case by case basis, and that's kind of why we built the software the way we have. It's extremely flexible, right? There's no this has to be here, this has to be here. It's all kind of modules. You can swap everything out, right? You can kind of again make what makes sense go into the model, right?
Fair enough. So let me ask you this, because obviously one of the primary reasons that we at Samara Asset Group have invested in you is because of your distinct technical competency, right? Um, what was it like going through diligence with our CIO at Samara Alpha, Adil? Because I feel like he can. So I know him personally, just as a very fun, loving, extravagant guy, right? I feel like when you're having a conversation with him, it's probably very different. I'd love to hear what your thoughts are like as he's doing the strict due diligence as he's doing.
Mm-hmm. I think did a great job just throughout the entire process, especially in retrospect, understanding how many different people he was actually having to talk to and do that diligence on. I
Oh,
do,
Doug,
yeah.
like it's crazy. I remember when I first told him, "Oh, by the way, we're doing this." He was like, "What the fuck are you thinking, Pat?"
But no, I mean the diligence process was quite extensive. I mean, honestly, we've done this for a number of different times, and so we were pretty used to it at that point. But that being said, I think that the team did a really good job. I think it was very thorough. It was very fair. I think sometimes these diligence processes can get a little bit ridiculous, but like the way that Adil conducted himself, I think he did a great job. I will say there was the time before we met Adil in Amsterdam in my mind, and then the time after, because once we met him in Amsterdam, we got to have
And
dinner
that's
with him.
exactly what I wanted to know because I feel like I know a very different Adil than you guys do, and I wanted to make sure that the Adil that you met in Amsterdam is the one that I know.
Yeah. Well, it was funny because like even at we had a dinner right with all the other like finalists right before the night of the competition, right? And even there, he's still kind of playing his cards close to his chest. Great poker face, that guy, by the way. If you ever play him in poker, you won't know if he's bluffing or not. But he played his cards really close to his chest. Oh, we don't know who won, but even then, it was fun. But especially after the competition, after we had known that we had won, right, and the cat was kind of out of the bag. It was really enjoyable to spend time with him there to get to know him, kind of just catch up, talk about the process itself, kind of candidly now that it was over. And no, I think it was overall a great experience. I think Adil did a great job. But yeah, definitely first few calls a little bit intimidating. I don't know
Oh,
about
he
you.
very much is. But I mean, that's why I love him. He's very professional, very diligent, very direct in your face when he has to be that way. And I love nothing more than the rare opportunities that I had to go to New York and I get to sit down and have a drink with the team. And then I get to meet Adil. It's a very different Adil. He's an unbelievably great guy. Now, so tell me this. How did you guys because you come from more academic backgrounds to a certain extent. How did you guys decide that you wanted to pursue this endeavor in crypto and then pursue this endeavor being a crypto asset management group? I mean, what was your, sometimes I always ask, what are people's Bitcoin stories? What are their crypto stories? I mean, what attracted you to the space?
Yeah, maybe I could touch on my background in terms of what drew me to crypto, and then Jack, you could kind of take it on how we started Animus. But
Sure, yeah.
for me, I grew up I grew up, and it did also involve a few drinks, by the way. Um, I'm actually
Matt, we just recorded a podcast a few hours earlier, and that podcast concluded with the best ideas come from a couple of drinks. It's validated again here.
We'll get there.
Yeah.
We'll get there.
I would say so. Yeah.
That's why I had another kid.
So yeah, my crypto journey began. I went to high school. I was born and raised in the Bay Area. Obviously, a lot of innovative tech minds around me. One of my closest friends, actually, his dad was the head data engineer at Facebook from like 08 to 2016. So in 2014, I'm close buddies with this guy. I'm in his household a lot, and his dad starts telling me about how all these Facebook execs are getting excited about Bitcoin and how they're trying to accumulate as much of it as possible. Like a small group of them.
What year was this, if you don't mind me asking?
2014.
Okay. Wow. Really?
Yeah. So a group of those guys were like, hey, we want 1%. Like, we're going to try and get 1% of this thing. And I know a lot of the execs there started teaming up and buying them in hordes. Naturally, I'm an opportunist, and I hear about, a bunch of people that I look up to that are really smart, really getting excited about this new asset class. So obviously it kind of piqued my curiosity. I had a more, traditional finance background at the time, but had always been interested in trying to trade stocks my whole life. So obviously you can see where the shoe fits here. Start, understanding crypto, and all of a sudden we're looking at 7 to 10% days instead of years. And I'm like, oh, this is exciting, right? How could it not fire off some dopamine receptors? So I'm like, this is really cool. Obviously started learning more ideologically about what the asset protects against, and ultimately what the value proposition of cryptocurrency as a whole was. And so that kind of leads me down to USC, where Jack and I are actually fraternity brothers. So I think this is a good time to pass it on to you, my friend.
Yeah.
Oh God, we're gonna hear a frat bro story about how you guys decided to do a crypto venture together.
Yeah. That's why we save the story for last. But no, my Bitcoin journey, I don't recall exactly what the inciting reason why I originally got into Bitcoin, but I do remember just thinking, I think this was 2015. I was sitting there with my dad, like, Dad, we need to buy one of these mining rigs. We need to get one of these things. We need to go plug it in the garage. Trust me. And he's like, son, this isn't even going to cover the electricity cost that it costs to run this machine. Little did we know we would have been acquiring a few, like whole Bitcoins at the time. But that was kind of the inciting moment for me. Of course, we didn't actually pull the trigger on it, right? And I've been kicking myself ever since. But that was kind of an initial moment, or at least a memorable moment for me, of where I was really like, not just, I can buy this thing, right? But there's an ecosystem around it. There's this whole mining component. Like, in me being a technical guy, my dad was a technical guy. That stuff was almost as interesting to us as, like, to Max's point, the financial component of it, right? And just kind of understanding how the hell this is working. Oh, this is a distributed technology. Like, everyone else around the world is just contributing to this. Like, it was just super fascinating to us. And to me in particular. And so, as Max mentioned, fast forward, we're actually in a fraternity together at USC, and I'm sitting there doing, I think, second year computer science homework, right? And Max's head comes in my door. He's like, hey, what do you know about AI? And I'm like, pretty fair amount. He's like, what do you know about crypto? I'm like, oh, also a pretty fair amount. He's like, come upstairs. We're talking about it. I'm like, all right, okay, sounds good. And so we go up there, and, there's maybe 7, 8, 9 guys in this room all talking, and it's like they're all talking grand plans about how we're going to conquer the world, right? But our particular
that's how frats are. All guys in a room, no women.
Yeah. In this case, that definitely was the case. But everyone kind of had their little corner of the world they were supposed to conquer, and we were supposed to be the quantitative trading and crypto guys, right? Turns out me and Max were a little bit more dedicated and enthusiastic about this than the rest of the folks that were in that particular group. People kind of just started spinning off and doing their own things, but it stuck with us, and we started starting to do prototyping. I think in this initial conversation that we had, we found some research from a number of guys over at Stanford. I forget the exact paper, but essentially they had said, I can take, it's like 17 features, relating to blockchain metrics and predict with some significant degree of accuracy whether Bitcoin is going to go up or down. Just a classification problem on a daily basis, right? This is super early days, but it actually worked, and I built it myself, and it worked for us as well, right? And so that was super exciting for us because we're sitting here like, hey, all these existing challenges, the entire idea of quantitative trading already exists and is very established in the traditional markets, but this is something that is working right now, and it's definitely underutilized and it's underserved, right? And I think even until to this day, it's still to a degree underutilized, right? And so that was extremely exciting for us. And from that point, it was just a game of iteration, right? It was okay. What other pieces of data can we consider? What other improvements can we make? That's daily. It's classification. Okay, let's go hourly. Let's see if we can do regression. Can we get an idea of how big these swings are going to be, right? And from that, it was basically off to the races. I mean, as they say, the rest is history, right? But that was definitely that inciting moment, was kind of to Max's point about blood in the water. We saw that and we're like, look, this works, right? I built it. I've independently tested it. It works, right? And so that was super exciting for us. And that's kind of what got us going as far as the actual kind of iteration cycle and the productization finally of the whole thing.
So I remember meeting a quant a few years ago, and basically he imparted to me, and this might be completely stupid, and you'll have to forgive me because y'all are infinitely smarter than I am. I'm an accountant. I can book the trades that y'all make. I don't understand why you're making the trades that you make, but hey, happy to invest in them. He told me that a lot of what we're seeing in crypto, they're like these oscillator strategies, very, very similar to what we saw in junk bond trading back in the 80s, which relatively similarly, that was a very nascent market, high yield, significant swing movements. I mean, is that kind of what we're seeing right now? And moving into the future, do you think that crypto's volatility normalizes, given that we now have the ETF, given that we now have that, not the ETF. I mean, we've had ETFs in many other jurisdictions, but let's be honest. The only jurisdiction that the world considered mattered for the ETF was America. We finally have it. Do we think that this stagnates crypto, or does it accelerate it?
That's a really good question. I mean, I do think that it definitely is one of these things you're going to have to kind of wait and see how it matures, because I think there's great arguments on both sides. I do think that the market, any market as it naturally matures, I think is going to start to see a little bit of a dampening of that volatility, right? It's not quite nearly the Wild West anymore, right? But that being said,
but more liquidity. So more liquidity begets less volatility. But then you look at it, and the Bitcoin Tether market has been the most liquid dual asset market for years.
Yeah. No, I mean, again, I think it's incredibly interesting because the dynamics of the market are definitely inherently changing, and that's kind of my job to continually kind of look at that and take a look at like kind of where these things are shifting. I think it's definitely a little bit too early to tell, especially now with like the ETH ETFs. You're kind of seeing differing behavior there versus the way that the Bitcoin ETF moved the market, right? So even now, kind of moving down the depth chart, there's already starting to see some differences in the way that the market's reacting to this kind of news, right? So I don't know, Max, if you have a particular opinion on that, but I'm watching with great interest as far as to where I think this develops. But I do, my inclination is that you're going to see some stabilizing influence on these markets just by the nature of the people that are involved and the amount of capital that they're putting in.
I agree. I think that you're introducing kind of the next generation of adopters in the space, which will lead itself to higher lows, people who look at this as a long-term investment, who are holding it truly as a hedge in their portfolio over a long term, right? Like just like from a portfolio allocation standpoint, a lot of people are just now blanket level saying, hey, you should own 1% to 5% of this asset in the next couple of years, right? So I think gradually there will be a dampening of volatility from the perspective of, quite frankly, how people are viewing it as an asset long term. Conversely, you have the number of Bitcoin on exchanges dwindling and dropping down by the moment, right? So it's an interesting, I think we're in for a really fascinating end of the year, to tell you the truth, because every time I refresh the statistics on how many Bitcoin are being consumed by these new vehicles versus, quite frankly, the amount that are put into supply, all I can think is supply shock, right? Like, so I don't think that by any means we are out of the woods from a volatility perspective, but I do think gradually over time you will have that dampening effect. as there are more entrants in the space, right? Overall, I couldn't be more happy with the fact that we're actually starting to get some of these vehicles just as a means of bringing in some of that next, again, that next body of adopters, right? People who are a little bit, less comfortable with wallet technologies, people who have been sidelined historically because of their capital vehicles are now, quite frankly, able to participate. And we're seeing that, like, just yesterday, I think there was $880 million of inflow in the ETF space alone. So
which is wild.
Insane.
So, and that was actually the second biggest day of inflows.
Yeah. And the reality is, it was interesting, right? Because look what the price did yesterday. It was positive, but nothing that kind of, like, in my opinion, kind of exudes that magnitude, right? So I think we're still in for a very interesting show in the latter half of the year as this dynamic of open supply continues to dwindle and inflows continue to skyrocket as more people enter the space. So long term, I agree with the take of dampen volatility, but by no means do I think we're there yet. I think it should be a fun year.
I think it's going to be a very fun year, especially since Bitcoin has become quite the political conversation, which isn't necessarily surprising. I always knew that it was going to get that way. I just, for the life of me, I didn't think Donald Trump, who has been recorded before saying how much he hates Bitcoin, right? It's vaporware as far as he's concerned. But the thing that concerns him most is votes. And I think Vivek Ramaswamy got in his ear and basically convinced him, like, okay, this is something that's going to get you. I mean, so I saw, did you see Anthony Scaramucci's tweet recently? So he tweeted something like that there's 90 million crypto holders in America and 60 million dog owners. There are more people that own Bitcoin than dogs in America right now. And I don't know if that's true. I'm not sure that data is actually real, because, like, okay, there's like what, 180, 190 million American adults. Theoretically, you should only own Bitcoin and crypto if you're an adult. You can't get on Coinbase if you're not. But hey, half of them own crypto? That doesn't sound right. But either way, it's become a very partisan political conversation. And I'm very interested to see how that ends this year. I mean, I don't know if it's going to win Donald Trump the election or not, but it certainly has swung a good amount of momentum his way. Yeah.
Well, I think at the very least, it's kind of forced action from the other side, right? I mean, you think about this whole kind of 180 that the SEC did on the ETH ETF. I mean, you have people closest to the situation try to say that it's politically motivated, right? I think it's very, very interesting that here we are in 2024 and it's actually politically untenable to be against crypto, right? Like, that's basically what we're looking at, right? Like, Trump making that move, yeah, definitely won him a lot of support, but it's also kind of forced the hand on the other side of the aisle. They're basically saying we're not going to die on this hill, right? So,
well, but then Biden goes and vetoes the bill, right? Now banks cannot be custodians. So, like, I look at that and I see. So Europe is interesting because you have a whole bunch of political groups in Europe that are very against crypto, especially the ECB and the EU Commission. They hate crypto. They think Bitcoin is vaporware. It has to go. It's destroying the economy, destroying the environment, blah, blah, blah. You go to the other side and you have lawyers, you have regulators that came up with MiCA. And while MiCA has its flaws, it at least portrays the rules of the game. If you're a crypto company in Europe, if you're a crypto issuer in Europe, if you're a stablecoin issuer in Europe, you know the rules of the game. And we haven't had that in America. We still don't really actually have that in America. So while, I don't know, Europe has been back and forth on this, but at least there's rules about it. It's just very weird that we don't have that in America. And it seems to me that the powers that be have decided they want to weaponize certain regulators against crypto, for good or for bad. But Trump coming out in favor of crypto, and maybe he's only doing that because Biden has been very against crypto, which Trump has been before. I mean, is that where we finally get a framework through which crypto can work from a regulatory and a compliance standpoint?
I mean, I definitely hope so. I mean, it is interesting to your point, right? Like, even just understanding to your point, what are the rules, right? Maybe they're not as favorable as we'd like or not, but like just having some sort of action.
But at least there's rules.
At least there's rules that we can play by, right? To a degree. I mean, this is a historical problem that's always happened, right? Technology outpaces regulation around that technology, right? You're seeing that same problem with some of these other AI technologies, voice cloning, all that kind of stuff, right? So it's not unheard of that we're lagging behind as far as the regulatory perspective is concerned. That being said, I mean, to your point, I do think that it becoming part of the election conversation this cycle, right, and becoming a much more political issue is definitely going to drive incentives to actually pass something, whether or not it's actually meaningful or structural or whatnot, but pass something that actually says like, hey, look, I'm starting to set the ground rules for this. I'm promoting innovation in crypto, whatever it is, right? I definitely think there's a lot of political motivation to start doing that now, especially in this election year, right? So I do think that this could be an inciting force to kind of, we talked about it previously, but kind of that spark that lights the fire as far as actually getting something done, right? Getting it on the president's desk, veto or not, is already a pretty good step. And so, yeah, I would imagine that's probably, if people are actually going to make good on their campaign promises, which is a completely different story. that'll
name a president that's actually ever done that.
let me. But anyways, whether or not it actually happens is another thing entirely. But I do think that it's definitely going to start pushing regulators in that way, because at the end of the day, like, there is so much American business, ourselves included, that are working in this space, that want to continue to work here in America, want to work with American investors and American citizens, that would love to have a clear regulatory framework so we can play by the rules, right? And so I'm hopeful that we'll get a clear picture of what that looks like, or a clearer picture. But who knows, really?
Exactly. So in the interest of time, because I know that we're going over, and you gentlemen are probably very, very busy out fundraising and making Animus fantastic. Tell me, what do we have to look forward to with Animus over the course of the next 6 to 12 months? What's the next milestones that you guys are hoping to achieve? And what is it that we might be able to do to help?
Yeah, it's a great question. From my perspective, I think me and Jack probably have very differing perspectives on this. But from my perspective, look, it's really about like being able to actually scale what we've worked so hard on for so long now. I think one of the beauties of the way that we've developed our strategies is that we are trading the two most liquid assets in the game at intervals of 7 to 10 to 12 days, which inherently lends itself to an extremely scalable approach. So from my perspective, it's being able to actually get what we've built into the market to a sufficient degree, right? So it's getting new people involved, new strategic partners, providing fund to funds with diversified strategies in their allocation base, right? Ultimately, just kind of like finding product market fit and really pushing this to its potential. So for me, it's all about we were such a product first company that I think the last hour has kind of told that narrative, right? And ever since we won the competition in October, for me, it's been really like, hey, how do we really get this out into the world? So to me, it's all about scaling this year.
Yeah, and obviously, I'm going to be helping out with that initiative as well. But on my side, it is always going to be, how do we first off make what we're doing better, right, from the ground up? Like, how can we get more accurate with the actual predictions that we're making? How can we package those predictions up into better, more stable models with different characteristics, right? That's an ongoing process for us as well. But also, what's exciting to me is something that we kind of alluded to earlier. How do we start to expand that, right? What's the next asset? Maybe, we like Solana this cycle, for instance, and there's starting to become a really robust data ecosystem around that, right? How do we expand into that? How do we offer additional products that touch additional coins that our clients are asking for, right? And so I think that kind of horizontal expansion within the cryptocurrency space is really exciting. We don't have anything necessarily to talk about yet on that front. But that being said, there's definitely active research going on there. So yeah, to Max's point, it's about just spreading the word, whether it's to people who are already in Bitcoin and Ethereum and are looking for something that's just a little bit better managed, or people who are in these other assets that are kind of like, hey, when are you guys going to do something for this, right? So yeah, it's going to be a really exciting year for us. It's already been a pretty exciting year, and so yeah, we're just getting this thing out to as many people as possible, because we've been working in the shadows, toiling and kind of in our workshop for a really long time, and so it's been really great to kind of see people get to start interacting with this thing.
And I just got to say, gentlemen, it's been an absolute pleasure to be someone that helped bring you guys out of that workshop and put you on the main stage. I mean, empowering people like you has been everything that I wanted to do with the Bitcoin Alpha competition. I can't wait for the next competition that will be in Bitcoin Nashville. I know Adil already has a whole bunch of managers that are going through, frankly, the same bullshit y'all did last year. So God help them. Best of luck to you. Can't wait to meet those managers. And Max, can't wait to meet you in person at Bitcoin Nashville. You're going to have to be a flight of my golf tournament. Really look forward to having you there.
Let's do it, my friend. Thanks again for everything you guys have done for us. We really appreciate it. It's been a pleasure working with the Samra team as a whole. I think Jack can say the same, that our experience has been nothing shy of a 10 out of 10. So we really do appreciate it. And yeah, man, it's good to finally meet you and get a face to a name. And we look forward to seeing you in Nashville.
I just apologize that it's a very red face to a name right now.
Yeah, that's all right.
It's been too sunny today here.
Wearing the pink shirt to hide my red face. I get it, man. I got the Irish in me too. But no, yeah, again, seriously, Pat, thank you so much.
I'm just way too Irish. Well, have a great day, gentlemen. It's an absolute pleasure to meet you. We'll see you next time.
Take care, Pat. Thanks.